Thank you. We were told that free cannabis samples were offered if you showed up for this session, so please see me after. Great, and we're so happy that you're here. Thanks for showing up for our last panel. All right. We are talking about high-risk, high-reward merchant services. We're here today with Chris Boone, who is counsel at Venable Law Firm, and he is our regulatory compliance expert, although our other panelists certainly can talk about that too. We're also here with Jody Durst, who is the CEO and co-founder of ePayments, as well as Glenn Smith, who is a senior sales executive at Pacing. So welcome, everybody.
Thank you, Peter.
We have a lot of questions to ask. Also, folks, we have a small group here, so if you're interested in asking us questions, please just raise your hand. You can interrupt us anytime. We want to make sure that we're answering the questions that you want to hear, as well as what we think you want to hear. So please, put your hands up if you want to. All right, so our first question for the panel is basically, let's define high risk. Glenn, we'll start with you, or Chris, we'll start with you.
Sure. So high risk generally refers to merchants that have an elevated potential for chargebacks, fraud, and regulatory compliance issues. But what it really kind of comes down to is what the card brands say it is, or your sponsor bank or acquirer says it is. And so if you're in one of those categories, one of those MCCs that are high risk, then you'll be under those high risk requirements.
Great. Jody, how about you? How do you define high risk?
I think that's a loaded question. It's definitely viewed by every acquirer a little bit differently, banks differently by industry, and I've worked with some acquirers that view insurance as high risk, and I would not even put that in that segment. So it really depends on their portfolio and what they're looking for and their appetite for risk. So.
Great. And then Glenn, same question for you.
Yeah, sometimes it's just reputational. There's certain businesses that banks do not want to be in business with for whatever reason, whether it's ethical, moral, or they just, they don't want to be liable to maybe the downline impact that certain industries might have.
Certainly I can understand that being in the cannabis industry. My company trains bankers on how to be compliant in cannabis, and it's quite challenging right now. So, and reputational risk is a huge part of that. Let's talk about the regulatory landscape. The impact that in the high-risk merchant services sector, and Chris, we're going to start with you since you're the attorney.
Sure. So the regulatory regime for any particular industry is obviously incredibly important. What I think is probably the most impactful, though, is when there is a lack of clarity or inconsistency across jurisdictions. So in the cannabis example, you have this huge conflict between state law and federal law. It creates this huge tension about what you can and can't do. And when you are facing that kind of tension from a banking or acquiring perspective, the normal approach is the more conservative. Or just throwing your hands up and saying, no, I guess we're just not going to touch it. And that's obviously problematic because then that industry doesn't get served. And that can be applied in many different other kinds of contexts, whether it's money transmission licenses required for certain activities or different approaches for insurance. When you have these kind of different regulatory structures, it can make it very, very difficult to have a kind of national approach for whether it's acquiring or just if you're a merchant trying to expand.
And certainly when you have an industry like banking and acquiring that already is conservative and highly regulated, and then you add this high risk onto it, that becomes sort of a trifecta of you need to talk to a legal professional to understand how to do business. It can be quite challenging. Any other panelists care to talk about regulatory impact? We can also move on to risk mitigation strategies. And Glenn, I'm going to turn this one over to you. What risk mitigation strategies have proven most effective when dealing with high risk?
Sure. I talked to a few people, one in the room here, And they do a lot of scoring and a lot of reserves, right? So you protect yourself by knowing that merchant and also kind of putting them in their own categories. So when an event occurs or chargebacks start to increase or they go over their high ticket, for example, you say, okay, this merchant scored in a way that we've decided they're risky from the beginning. We're going to approach this a little bit differently, right? So if you had a restaurant, for example, and they double their high ticket, your system will let that go through, right? But if you were working with someone who maybe doesn't have the funds necessarily that you're comfortable approving, but you're like, I'll take a chance if they double or triple their ticket, you're going to put a hard hold on it and you're going to investigate it. And then also running reserves, right? So you protect yourselves by having a little bit of a pot of money that if things were to go bad, you can kind of dip into that before you're holding the bag for the liability of those things.
Interesting how that works. And I know again from the cannabis industry that, processing is always challenging, and even getting an account is challenging as well. So it sounds like what you do is, instead of saying no to high risk, you rate them so that you can charge appropriately?
So it's about charging, and then it's also, so every morning if you talk to any risk person, they come in and they make a decision, right? Do I release this batch? Do I release this transaction? And you look at a variety of different data, right? What's their credit worthiness? When I approved them, was I comfortable approving them, or did I just do it because my gut said, let's take a chance? Yeah. So it's those elements that you evaluate almost on a daily basis, and then decide from there whether to move forward. Eventually your system learns that, right? So the machine's making that decision. At this scoring, they'll allow certain things to go through, and at this scoring, they're going to hold back and give an opportunity for a human to kind of take a look and maybe investigate or talk to the merchants and understand why things are shifting.
Great, thank you so much, Glenn. So we talked about risk. Let's talk about rewards. And I'd like all three panelists to answer, what are the most significant potential rewards when dealing with high-risk merchants? And Jody, you're smiling, so you're up.
Let's not be crazy, it's about the money. It's about margins, but you also get sometimes a jewel in all of that. You could get someone that was considered high risk eventually, like an Amazon back many, many moons ago, I'm going to date myself, would have been considered high risk, and now it would be the golden jewel if that was your client. So there's a little bit of it, and if you love to solve for problems, you are in the right space with high risk, as it is changing every single day.
In addition to higher fees, I think one of the kind of best rewards to going into a high-risk sector is you can build long-lasting relationships because the merchants in that sector don't have as many options or availability for merchant payment services. And so you're able to build these relationships and develop an expertise in an industry sector that isn't as popularly serviced. And that is like a huge advantage as it becomes less considered high risk. And then you have a huge share of that market and you've proven yourself to be able to serve that market.
The key point I had was less competition, right? There's not 20 people knocking on your door to get your high-risk business the same way that a retail placement experience. But a point that Chris made, off stage was you kind of coach them through activities that would make them less high risk. Don't make certain claims. Don't push your delivery date out so far. Don't allow certain customizations or things like that to create a high-risk opportunity, right? So him and his firm go through, they review their websites, and they kind of pull out different things that lead to issues down the road, and I think that's very powerful.
Excellent. Well, let's talk about technology, and we're going to address AI in this segment. How many of you are familiar with ChatGPT and have actually used it? It's pretty crazy, huh? It's pretty amazing. The technology advances that we're heading into are frankly mind-boggling. So let's talk about technology in terms of what innovation is coming down in merchant services and how does AI tie into that? Jody, we're going to start with you on that one.
I think it's going to have a huge impact on our industry. So it's already there, but I think we're going to see it grow, and it's going to change the underwriting process. It's going to be how we evaluate merchants. We're going to know so much more information than we ever did. So I think it's going to have a tremendous impact, and it for the good and the bad, right?
It's always a Pandora's box, right? When we're talking about new technologies, how to use them, there's always good and bad, as is reflected by our own humanity. Chris?
Going off that, absolutely, banks and acquirers are going to be able to leverage massive amounts of data, and they currently do, but with AI and machine learning, it's just going to make the risk scoring or real-time monitoring of transactions just that much better. The flip side of that, though, is fraudsters also have access to these tools and can use them in different ways, such as your common telemarketing scams or chat texting scams to get people to send money. Now I can imagine them using a chat GPT type of tool to automate the scams and improve it. So it's going to be both ways.
That's right. Glenn?
So my thought, and I'm not sure how far along we're on this, but imagine you're able to take 1 million examples of what a merchant account can had, right? And then find the similarities in that data, and then have AI tell you 6 months in advance, like these are telltale signs that we're headed in this direction, right? So if you pulled a million row spreadsheet up, it'd be very hard to consume and say, okay, when did this go wrong? What month? What chargeback ratio? What refund ratio? What change in volume causes? But I think AI can do that very quickly, and the more examples you can get it, I think the more ahead you can get it. I think that's going to lend itself to more companies taking on risk of business, because you can manage it, kind of see it coming, you can cut it off a little bit sooner, and it never really becomes a risky account.
Excellent. Those are very interesting answers. It is a Pandora's box right now, so we'll see how that goes. So we talked about balancing risk with reward. Let's talk about balancing risk with growth. So how do you maintain a balance between the risk management and the business growth in high-risk merchant services? Glenn, let's start with you on that one.
Sure. So, not to be cheesy, right, but it's a play, you have to take risks. And I think the entrepreneurial spirit in the ISO is there, right? So they're taking a risk by going on their own and starting their own business, so they're kind of conditioned to taking calculated risks. But we found in talking to just a few people preparing this panel that they tightened up too much during COVID, right? So they're looking at their losses, and now they're somewhere between 1 and 3 basis points on loss, and that's a little bit too tight, especially to play in the high risk space. We're seeing elevated risk thresholds, which allow them to go after new MCCs or expand the relationships in the MCCs. And if you're not too scared to lose, and you have the opportunity, right? You can't just play so tight and then think you're going to grow, right? You have to find ways to expand. Whether it's MCCs you're working with, the type of volumes are, the average ticket size, or whatever it might be, you have to take those risks.
So something's got to give on the risk side in order to get that growth that you're looking for. Any other panelists? Jody, do you have any thoughts on this? Chris?
I think balance, definitely. It's all about the balance of the portfolio and being able to pivot, because you are going to need to pivot if you play in high risk. You're going to need to move quickly and have that ability to make changes on the fly. So
That's a great point, and pivoting is not always easy. You've got a leadership team, a board, you have people pushing back. So finding that right balance is very challenging. Chris, any thoughts on this?
I would just go on to say, being proactive and adaptive to how you are evaluating your risk tolerance will be important, to just make sure you're avoiding the landmines, because there's acceptable risk and then there's unacceptable risk, and you need to keep that in mind continuously, so you're not stepping.
Right, it is a continuing monitoring of that risk and the growth and not going too far on one or the other. So thank you for that. That's really interesting. Let's talk about financial risk associated with high-risk merchants. For example, cannabis banking relationships. And Jody, I'm looking to you to answer this one.
Equals difficulty. It is ever changing. I feel like I'm a broken record up here, but it does change all the time, and it's very difficult for cannabis in particular to find a banking-friendly environment. And we've seen many places over the years that like the business for the moment and then pull back out of the business. So I think it's an interesting place to be in, because I think cannabis at some point will become legal, so those banking relationships would already be established, but it's still very, very small market that will take it.
It is. I think there's only about 300 banks in the U.S. that truly bank tier 1 cannabis. So it is a very high risk area. High reward also, and it's, well, we're using the word high. I'm really in the cannabis business for the puns. It helps. So great, thank you, Jody. Let's talk about some lessons learned with dealing with some of the more challenging aspects of being in this high-risk merchant services business. Can you all share some lessons learned from dealing in this industry? Glenn, let's start with you, and we'll go Chris and Jody.
I've been lucky enough that all my lessons have been learned at arm's length, so I haven't been personally affected, but I have seen things go wrong. And I think a big piece of that is they set and forget, right? So they board a merchant, they're liquid, they're a solvent business, they have a C staff that's really driving them in the right direction, and they don't think about it for 6 months, right? They don't reevaluate, they're like, and it goes back to that scoring. If you score this merchant, as an 80 on a risk to 100 on, the threshold for your risk, and they just don't talk to them again, and then all of a sudden their C-suite leaves or product costs increase, and then adjust the margins just enough to put them in a riskier category, that puts you in a bad spot, and then when you're working with them and you're asking for updated financials or new banking and they push back and they're aggressive, trust your gut, right? Sometimes they're frustrated, you're bothering them on a Monday and things are going crazy, but if they have an adverse reaction that just seems lopsided to the request, then put things on hold, right? It's not going to hurt them too much if you hold a couple batches while you figure things out, and I think that's very important. Don't be afraid to offend them because you have to protect your organization and the bank and everybody else.
That's a great point. Chris?
I would say, especially in the context of entering into a new space or vertical, whether that's like cryptocurrency and NFTs or cannabis or nutraceuticals, going into the brand new vertical without a plan. It is super helpful to know and understand your industry and the regulations that kind of govern and apply to the different aspects of that industry, and develop policies and procedures about how you're going to risk rate and board those merchants, what aspects are allowed and what aspects are not allowed, and start from there rather than kind of an ad hoc approach where you kind of just take on a merchant and then all these issues appear and you don't know the answers to any of the questions, and then that just happens over and over and over again.
Thank you, Chris. Jody?
I think I would agree with both of you guys. It's definitely getting to know your merchants, and you'll find out there too that they do not believe they're high risk. So you could take like the coaching industry, for instance, and they get really offended thinking that they're high risk and why they're high risk. So getting to know them and educate them as to why that might be the factor. And then just having a backup plan, I think, would be the other thing I would encourage you to do.
Great. And then let's discuss, I do have to say, I've been on the opposite side of the merchant services business. I've needed an online merchant account. And so coming from the other end of it, the customer end, having to do those bank accounts, having to go through the due diligence process, and especially for cannabis, it's even more lengthy, enhanced due diligence. So that can be very frustrating to go through that and get turned down. So I understand everything that you're saying. So let's talk about those lessons learned that we just discussed, and how can acquirers enhance their compliance practices to better manage that high-risk merchant? Chris, we're going to start with you.
So this really kind of ties back into needing a game plan. So for example, if you are an acquirer and you're going into the NFT space, there are many different NFT types of merchants, different types of NFT marketplaces, and how interconnected they are with cryptocurrencies. And each kind of little minute question about that particular merchant's model could raise money transmission issues, for example, or it could potentially raise securities, investment contract issues, for example. And so knowing what questions to ask the merchant in order to understand what they're actually doing is incredibly important, and then being able to extrapolate the answers to those questions into, okay, well, how much risk are we taking on by boarding this merchant? Is this what we want to do?
Great. Jody?
Yeah, if I could add to that, I think too, is also getting with underwriting and educating them also, because you could say one wrong word in the underwriting process like marketplace and they'd be out, and they're really truly not a marketplace. Or educating them on NFTs, that there essentially is no chargeback, like it's done. So just taking that step further and have those conversations with the people that you need to.
Great. Glenn?
I'm not sure there's much more I can add to that, but yeah, I really think that's it.
Great. Awesome. So this is our last question, and folks, think of questions that you might have for this panel too. What are the next emerging trends, changes in the high-risk, high-reward merchant services industry? If we could have a crystal ball, I know we can't, but what are you guys seeing as the biggest trends? And why don't we go down, Glenn, Chris, and Jody?
Sure. So we talked earlier about reputational risk and why banks might consider that high risk. It's not a risk for chargebacks. It's not a risk for a loss, but they just don't want to be associated with certain businesses. But our culture is shifting, right? So things that are taboo today might not be taboo in 5 years, and those things will just become traditional risk, and then things will become more competitive in that space. And then, we're again entrepreneurs, so entrepreneurs are going to work with banks and say, okay, now that this is traditional risk, what is there room for? So we're going to kind of see like a cycle of, high risk becomes low risk, and then we're bringing new opportunities to drive business where we're able to process.
Very interesting.
And then, more tech and intelligence is going to allow traditional risk companies to jump into that high-risk space. We talked about earlier having machine learning that can kind of predict losses and opportunities for things to go sideways. If you're comfortable with that technology, then you're probably comfortable getting in that space, now that you feel a little bit more protected. So I think we're going to see a big shift of, high risk, kind of compressing, maybe the margins getting bigger within that compression, but traditional risk kind of stepping that space a little bit.
And then the high risk is going to change as new products and services come into the industry.
Absolutely.
Great. Chris?
I absolutely agree. I think the automated AI-based kind of compliance tools are going to continue to advance and become better and better at being able to identify suspicious activity and fraud. And as high risk today, with our cultural shift becomes less considered risk, I think we're also going to see kind of a pay-fact merchant aggregation spreading more and more into what currently today is the kind of high-risk sector.
Excellent. Thank you. Jody?
I think you guys answered that perfectly. I think the other thing I would mention is just the fact that we are in such a society where we live and breathe in our phones, and new technology and all of that is going to impact the way we view everything coming forward. So I think we're going to see new things emerging that we haven't seen before, just like every generation, but we definitely are now.
Excellent. Before we open up for questions, I want to thank Lead Tech, the sponsor of this panel, coolest sponsor ever. I'm a little biased. But folks, what questions do you have for our panel? We've stunned you silent. Oh, we got one, yay.
I'm wondering, we're seeing an increase in car grants, cracking down on things like grant violations, pertaining to nutraceuticals, things like that. I'm wondering if you're seeing the same thing in your experience, if you're having that incoming, or if it's just isolated to perhaps our portfolio.
I absolutely think that's going on. In my practice in particular, I've noticed the car brands are becoming more concerned with surcharges in particular, cracking down on surcharge practices and other kind of brand protection types of measures. So yeah.
I agree too. In cannabis alone, there's been major changes around the debit networks and what they will accept. MasterCard just stepped in and said they will not allow it. So we're seeing tons of changes there. And then also around nutraceuticals, there was a lot of changes that came out earlier this year that really impacted the merchants. So yeah, you're seeing a lot of things being shaken up by the card brands.
Great. Any other questions? All right, well, thank you so much for hanging in there to the end.